Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and I'm speaking today with Robert Sinn, also known as Goldfinger on X and Twitter, founder of Goldfinger Capital, has a YouTube page, which we will link to below, as well as a new Substack page. So lots of ways to follow Robert. And man, it's always great to get you on the KE Report just to get your thoughts at any time of the year, but especially here at the beginning of the year, Robert. I'd like to get your thoughts on the precious metal sector to kick things off. I mean, what we saw in the fourth quarter was a nice rebound coming out of that low in October. Whole sector kind of rallied through November, December, maybe staving off a worse tax loss selling season because a lot of the selling had happened early in the year in the equities. But as far as the metals, they held up strong, especially gold. Gold ended the year having an all-time high monthly close in November and a weekly close in November, and then following that up with another weekly and monthly in December, briefly eclipsing the highs of the past to new all-time highs, and then started 2024, Robert, here in January with a sucker punch to the gut that's pulled back to start the year. What's your take on the yellow metal and the precious metal sector in general?
Thanks, Chad. It's always great to be on the KE Report. And just to be clear, I am Goldfinger Capital on YouTube, and now a new Substack for Goldfinger Capital. And I'm at Goldfinger on CEO.ca, but on X, I am at CEoTechnican. As far as gold goes, a little bit of a hangover here early in the new year, and we were talking about that a few minutes ago. There was a little bit of euphoria there about a month ago when gold spiked very briefly above 2100, and now we're having a little bit of a digestion here. But I really don't view this little pullback here that we're seeing to start 2024 as anything too consequential. In fact, I think it's quite healthy. Really, the first near-term level I'm looking at on the gold daily chart is 2020. I think that's a really important key support level. It lines up with some previous highs from last October, November. It's also where the 50-day moving average is coming in at right now. And then, if for some reason gold does dip through that and gets back through 2000, I'd be looking at 1980 as a big level of support. So those are the two levels I'd be, looking at right underneath where we're currently trading here this morning around 2030. And then, hey, it's a round number level. I think 2100 is it's a big psychological level. It's actually a technical level too. And that's the big, nut to crack. And I think as long as gold is just trading here between 2000 and 2100, it's just consolidating, marking time. And it's not really a breakout confirmed until we really get that weekly close above 2100. The quarterly close at 2070, the annual close at 2070 in 2023 was fantastic. We have been holding above the 2000 level on a weekly closing basis for, I think, 6 weeks now. So all of this is very constructive. And just, one more thing I'll say about gold. The sentiment is very mediocre. I don't sense any excitement really among gold bugs. I think the crowd, the herd of investors out there barely owns even an ounce of gold. I think the sentiment is very constructive here. We're nowhere, if I just look at the sentiment backdrop, this is nowhere near a major top. We always like to talk about baseball games, in the US, but, if we use that analogy, I think we're like in the fifth or sixth inning. This thing is nowhere near the ninth inning. Silver, because that's the other, metal that we like to talk about. Silver is very frustrating. And just really, if you pull it out to a 1-year chart, it's just a big range. And there's really no point to even delve in any further than that. It's a big, messy range. And right now, the moving averages, the 50 and the 200 are at exactly the same level. They're both completely flat at 2380. And that pretty much sums up silver right here. It's a big, sloppy mess. And, I see these guys on X making up these fancy charts, talking about $40 silver, $50 silver. Well, there's no indication that that's around the corner here anytime soon. We would really need to see a decisive breakout above 26.50, 27 And again, on a weekly closing basis, not something for just an hour or two on a Sunday night or something. It would have to be a really powerful move above 27. Then, and only then, would we get really excited about silver.
Yeah, Robert, it is a sloppy mess, and it's really been in a sideways channel for a long time. It hasn't really got a direction. Some would say in short-term gyrations, there's been some moves to the upside and downside that could have been played, but in general, it's been whipsawing back and forth. Gold has been a much more constructive chart. And just one quick follow-up on the gold chart and just the pricing, like you mentioned, the 2000 and even the 2100 level are psychological levels as well as technical levels, but we've heard from a lot of people that we need to see 2000 as a floor instead of a ceiling. I mean, we've heard that all the last couple of years where it's been trying to break out. Do you think because gold has been buying time above 2000 on the weeklies, on the dailies, and even having some good monthly closes and quarterly closes and the annual close, as you mentioned, all of those longer term chart factors stacking up, do you think for generalists that matters, that now gold is at least starting to be perceived as having a floor around that 2000 level?
Yeah, I don't know if we can go as far as to say it's being perceived as having a floor at 2000, but I will say that definitely the $2,000 price is being accepted. You know, the market is accepting the price, and and we see the solid evidence of that because price is trading above 2000 for so many weeks in a row now. So the 2000 level is accepted by the market. And I think that slowly the psychology of investors will start to shift that, oh, okay, this $2,000 gold price is actually for real. Based upon what I see out there and what I hear from other market participants, big institutional players, they haven't changed their view on gold or gold miners one bit in the last month, the last year. Still a very hated sector that is not owned by many at all. And in fact, you know, the gold miners, including the biggest gold miner in the world, you know, which is Newmont, I'm hearing that a fund is being liquidated in the last week. So a gold focused fund has been selling their holdings, and that helps to explain, at least partially, why Newmont is having such a dreadful start to 2024, getting really hammered on Monday and now down here again, this morning.
Well, I want to get into the precious metal stocks for sure, and we'll talk about the underperformance and the weakness in that sector compared to the move we saw in the metal. But just one more quick one on gold, more of a fun question, Robert. We've seen a little bit of retail interest over the last year that I think surprised some people. One being Costco starting to sell gold bars and it becoming like a retail impulse buy while you're at Costco. But also, I was sent a couple of videos over the weekend, and I didn't realize this was happening. It's about several months in the making, but there is a big trend in China among millennial and Gen Z youthful investors buying gold beans. And they're like these small increments of gold, and they're filling up jars of gold beans and trying to buy one bean a month. And there's a big trend of social media and backing people up and making videos about retail younger investors. We're talking people in their 20s and 30s here that are buying gold. And it's something that hasn't been seen there in really a generation or two. Do you take anything away from this kind of bizarro retail frenzy we've seen into some gold products recently? Is that a good sign or is that a concerning sign?
You know, that's a great question. I didn't know about the gold beans in China. I'll have to take a look into that. But I do know about the Costco and Walmart now selling gold coins and 10-ounce silver bars and such. I did know about that. I mean, really, when you think about the size of the U.S. as a country and the amount of wealth in this country, Costco selling 50,000 gold coins is really not a big deal when you put it, into context. I know it's kind of new because these big retailers haven't sold gold and silver in the past. It's a fairly new thing. And I would say it's a positive. It's a positive for precious metals. It's a positive for, investors, in the sector. It makes it more, accessible to them. And I don't see it as being characteristic of any kind of retail buying frenzy top or anything. I mean, if anything, it's a sign of the average person, the common man, Joe Beer Can, as we like to call him in the US, becoming more aware of precious metals as an investment and as a long-term store of value. And I know there's a lot of people out there that love to bash gold and say that it doesn't perform in inflationary environments, blah, blah, blah. 2021 was an example of that. And that's because they are very ignorant and cannot understand the clear difference between monetary inflation and consumer price inflation. Precious metals, gold, namely, is not a hedge against consumer price inflation. It's a hedge against monetary inflation. When we had the monetary inflation from the extraordinary central bank policies of 2020, gold performed. Gold did not perform well in 2022 when central banks were tightening and trying to raise the price of money and rein in that monetary inflation. So gold has done exactly what it's supposed to do for the last 20, 30, 40, 50 years. It has done exactly what it was meant to do.
Man, a fantastic point there, and you're so right, because the whole idea is that gold is a hedge against monetary inflation when the money supply swells up, and it's done its job over and over again. Different thing entirely than consumer price inflation, which a lot of times is being orchestrated by supply-demand issues. You know, the cost of fuel had gone up, but also companies just raised prices because they could hide behind the inflation banner. So it's a little different animal, and that's not what gold's role is. But even in general, over thousands of years, gold has even held up well against all price inflation. So it still has done its job. But let's look at the precious metals mining stocks. A lot of them are doing their job and getting no credit for it, Robert. These are not impulse buys at Costco or Walmart. For most investors, they are speculative instruments for trading, and they just haven't been getting the love. Do you see that changing in 2024?
Well, that's the tough question, Shad. And you've asked me that question before, and Corey has asked me that question before, and it's always a tough one. And I think I've answered it, quote unquote, wrong a few times in the past, and I might be wrong again. I mean, the first answer is I don't know. And just based upon the start to the year, it doesn't look great. But then let's put it into context, this little pullback here in the first 6 trading days of 2024. Let's put that into the context of what we had the last 3 months of 2023. And this is nothing but a correction, just standard stuff. I will say that if we get any further downside, let's say with the GDX, if it drops any further than 29, I would start to get a little bit concerned. We do have a nice trend of higher lows and higher highs on the daily chart, and I would not want to see that trend snapped. So right now we're having a little bit of a stretch, a pullback to shake some people loose from the bull trade and gold miners. But I would say we're at a critical point here, like exactly in this moment as I'm speaking these words. I think the GDX needs to hold here at 29, or else I would start to get concerned. We're seeing like Newmont get hit like 5% in the last 2 trading sessions, and that's a big deal for a company that has a $50 billion market cap. That's a lot of value being shaved off there, and I don't fully understand it. I heard they might have some problem at one of their mines in Australia, but I don't really have a lot of color on that. There's also a report from TD in Canada out that they put Newmont on a hold rating because they want to see the earnings with the combined companies for the first time, because they made a big acquisition at the end of 2023. They want to see what the first quarter of that combined company looks like. That sounds to me like they may have caught wind that it's not going to be great, and they're having some integration challenges. I don't know, but the price action is pretty dreadful. But let's just talk big picture here. If the Fed is going to cut rates 5 or 6 times in 2024, you want to own gold miners. I think gold miners will perform well if you have a 12-month time frame. If for some reason the Fed is higher for longer, then that would be a problem. Then I think gold miners will have some tough sledding. So really, in my mind, 2024 really hinges on what your view of central bank monetary policy is going to be.
Yeah, fair comment. That seems to still dominate the mindset of how many markets are moving, not just in this sector, but in many sectors. But one more question on the precious metals mining stocks. When you say, you want to have some miners, do you mean across the board where you have producers, developers, junior explorers, or are you saying that because in general, when money comes in the sector, it's going to go into the producers, the mining stocks, that's where you want to be positioned? How are you looking at the different subsectors within the gold mining stocks?
Yeah, that's a great question. So for me, I am focused more on the mid tiers and the idea that there needs to be more consolidation in the gold mining sector, and it's natural that the majors will eat the slightly smaller companies. So let's say the 10, $20 billion market cap companies will start buying the $1, $2, $3 billion ones. So that's where I'm mainly focused, but I also obviously play in the juniors, much higher risk, much more speculative. And you would look to see the juniors participate later in a bull market cycle in the gold miners. So, if we're right that November was a major low and we're 2 months into a new bull cycle, you wouldn't expect the juniors to really soar until much later in the year. So maybe like month 8, month 9, month 10, when you start to really get more mass participation in a bull move. Right now, the juniors, yeah, some of them have had some moves, but if we take a sample size of, let's say, 100 juniors, they haven't moved at all yet, right? So we're still, if this is, and that is a big if, remember we make these if statements, then something might happen. So if we're right that November was the capitulation low in the senior gold miners, then you'd probably want to own the juniors in the second half of 2024. There probably isn't a hurry to own them just yet.
Okay, solid point. And I think that sometimes you see the big boys move first. You see some of that consolidation, and then it does trickle down the risk curve into the smaller stocks once there's some momentum in the equities. Well, let's shift things over to one of the other most discussed commodities and metals on our site, and I know on many other platforms, and that is copper. You put out an interesting article to subscribers this morning, Robert. I won't steal your thunder on it, but it was really highlighting how copper may be set up for a better year in 2024. And this was following up on a piece that you were going over with folks from Jeff Curry of Goldman Sachs.
Yeah, I think that was a great clip of Curry there talking on Bloomberg. It's about focused on the commodities theme in 2024, but he actually says that copper is his favorite one. He's wearing a copper, wristband, and he thinks that China is going to reflate, and global central banks are going to ease throughout 2024, and that's a really nice setup for copper to perform. Meanwhile, the price of copper is at 379, really hasn't budged, much at all. It's just been consolidating, for the last year. And really, to bring new mine supply online, you need an incentive price above $5 a pound. So we're nowhere near that. And copper globally is very, supply challenged. And we've seen this Cobre Panama get shut down. We've seen some other copper mines not do so well. And there's not a lot of new mines being permitted out there. And we know that even from the moment they get permitted to when they go into operation, that's another 3, 4, 5 years. So the outlook for copper looks really compelling, looking out 1, 2, 3, 4 years from now, as the supply response is just not there. And it's not going to be there unless the price moves up a great deal.
Well, Robert, just in relation to the copper narrative, we have heard for years, there's been people pounding the table that this supply-demand imbalance already existed. Robert Friedland's gone out there for years and made that point, as have many other people in the industry. And when we saw, a move in 2020 with the supply chains around the world, and manufacturing was being looked at differently, and the whole way the world interacts, copper came up all the time in that discussion. And it did have that run in 2021 where we did see a big move in copper. And then again on the Ukraine war, when there was kind of that commodity squeeze, and we did see copper briefly eclipse $5. But people have been bullish on copper for years, and we were making the analogy before the call that this reminds me a lot personally of what happened with uranium, where the case was obvious for years that it needed to go higher, and then when it did, it finally really shot higher. Same thing with lithium. The case was there for years that the supply-demand mismatch was there, and then finally the lithium equities really took off like a scalded cat to the upside and went up 10x, 20x. Do you think copper, because it's such a huge market, can make those same kind of moves like a uranium or lithium, maybe just on a smaller scale, where all of a sudden people have an aha moment in the market, there's that collective understanding? Or do you think it's going to be a gradual grind higher? Because we've been waiting for liftoff for a long time now.
I think that's a good comparison to those two other metals. With, lithium, what really got it going was Tesla just absolutely achieving a much greater scale of manufacturing in late 2020 and into 2021. So, the same thing could happen in copper. There's a lot of talk by governments globally. We need to build infrastructure. We need to do these power grid upgrades. We need to do this, we need to do that. But there's not a lot of action. Politicians are good at talking, but not really doing action. Well, if some of those big infrastructure projects do get going at the same time that the EVs continue to ramp up, with millions of them being manufactured every year, then absolutely copper could have that moment. Right now, copper's under $4 a pound, largely because there's concerns that the U.S. economy is weakening, and there's a lot of concerns about China. But what happens if China does manage to reflate again, and the U.S. economy stays in a growth mode, now not high growth, but even if it's 2% growth or 2.5, that could still be enough. There's been a lot of talk about the power grid and how we need to do all these big upgrade projects. Well, if you go to any major city in the U.S., the infrastructure is pretty old. It's frankly kind of archaic. So when those projects do finally get funded and get the green light from government, then I think it's all systems go for copper. And again, the U.S. is one little fraction of the world, right? There's a big world out there that's hungry for copper.
That's absolutely true. And to a degree, in the copper producers, we have seen some of them actually hold up pretty well the last couple of years. More of a channeling sideways than a sell-off like we saw in so many other commodity resource stocks. As far as the copper stock universe, when you look at something like COPEX, COPX, it's an ETF that has in it most of the large producers, the medium-sized producers, and a few of the very largest development companies. If you pull up a longer-term chart on it, it had a big bounce out of the pandemic lows into really mid-2021 and has more or less channeled sideways the last 2 or 3 years. But if you look at the copper juniors, with the exception of a few well-publicized drill plays that have gotten a lot of love, like the Philos, the Solaris, the recent move in Hercules Silver, other than a few standouts, the vast majority of about 100, 200 copper juniors have bit the dust along with all the other commodities. Do you think that's going to continue to be the case, maybe longer term, like different time frames for the producers versus the explorers? Or will that sudden aha moment in the copper space suddenly light a fuse under these copper juniors?
Yeah, I think it's very similar to the gold space. You have Freeport-McMoRan consolidating near its highs, looking quite bullish, and you have a lot of copper juniors just sitting dormant, So you need to get further along in the cycle to where there's more consolidation for the juniors to really perform. And I think that just one little tip, and what I'm doing as far as my copper juniors, I'm focusing on North America. So the US and Canada, that's my main focus. And I'm focused on companies that have projects that could really achieve scale. And a lot of that is in terms of porphyries, copper, gold, moly, porphyry projects that could achieve scale. And I'm talking the scale of the order of 5 to 10 billion pounds copper equivalent. That's the scale you need to have a major mining company get interested in your project. 1 billion pounds of copper is just not going to cut it. You got to have at least 5 billion, and more preferably 10 billion pounds to get the Rio Tintos and the Freeports of the world to get interested in you. And you know, at the end of the day, that's what a junior is trying to do. They're trying to advance a project, get to the stage that a major company, a much larger company, wants to take it off their hands at a premium. Okay, and so that's what you need to think about anytime that you're looking at a junior mining company, is who's going to be the buyer for this company at a later stage, and what does that look like, right? And so I'm focused North America because of deglobalization, good jurisdictions, places where you can get permitted, where you're not going to have the mine taken from you by a change in the law like in Panama. So hopefully the US and Canada, we don't have, even though the political situations look a bit tenuous right now in both countries, hopefully we will still have rule of law here in North America.
Well, Robert, we'll wrap it up there. We'll see if we do keep rule of law here in North America or not. But great points on copper and how you're playing the junior sector as far as the jurisdiction, the size and the scale, and who the potential suitor could be for some of these projects. Some great thoughts for investors to consider as we roll into 2024 and they look at their own portfolios. We'll have you back on again, I'm sure, Robert, to discuss some other sectors and some other areas of the markets. There's about a million questions I'd still like to ask you today, but for today, we'll wrap it up. And if people like following along with Robert, definitely click on a few of the links under this interview. It'll take you over to a few of his pages that we referenced earlier. And as always, Robert, looking forward to our next conversation.
Thanks a lot, Chad.